Matt Justice here for Tackle Trading, here to talk about 2015 predictions. We recently did a podcast, Tim and myself, and the podcast didn't work out. It was a live podcast during our chili cook-off, and yes, I did win the chili cook-off as was expected. Tim was a little bit of a, he was a dog in it, in terms of the predictions going into that. I think he went a little too spicy on that. Wish you could have heard that podcast, though, but the audio didn't work out. We had too much echo. But in the podcast, while we were doing our chili cook-off, we did a top 5 predictions for 2015. And what I wanted, the predictions I had, Tim can do his own video on this, but I want to do a video on it and kind of list them out. The first prediction I made is that oil and the market, the S&P 500, will correlate before the end of 2015. Now, that could be correlation on the upside, it could be correlation on the downside, but I do see them getting more in terms of correlated in over the course of the next year or so. And the reason I made that a prediction is right now you're looking at crude oil, and this is the futures contract for crude. You can also look at USO if you want to do the ETF version in the stock market. But crude is in a very, very big downtrend. In fact, crude has already lost 50% of its high value over the course of the last 6 months. Well, actually, as you can see, it's in a downtrend, but if you look at the ES contract, which is a futures contract, it is in an uptrend. I see these two getting more correlated, meaning number one, crude will start going back up, or two, the ES contract will go down. So that's kind of the first prediction, is that they will correlate by the end of 2015. My second prediction might not be very popular opinion amongst some of you out there at tackletrading.com, but it's something that I have been bearish on for quite a while, and that is gold and silver. When you look at gold and silver, and again, you can look at the futures contract or you can look at the ETF versions. Both of them are very, very similar. When you look at SLV, for example, this is the Silver's iShares ETF, and we're going to switch this out to a weekly chart just to kind of see the broader view here. As you can see, this is in a downtrend already. Many people are calling for a bottom in silver, and it certainly could be. It certainly could be. And it would not shock me in any capacity to see silver and gold go up, especially if the market does, in fact, start to go in a bearish downtrend in 2015, which we'll discuss in a later prediction here. But right now, you have to trade with what you see, and what I see is a downtrend. What I see is a low base, and what I see is this trend has been going on for about 3 years now. There's nothing in the price action right now that tells me that silver is going to stop doing this. Again, could it ultimately prove to be a bottom? Absolutely, but not yet. So I am calling for silver to continue to go down. I'm calling for gold to continue to go down as well. My target on silver for a long time, it was originally $20. It then turned into $15. I have a target currently on silver at $10 an ounce, and then on GLD for about two and a half years now, I've been calling for gold to get down to into $1,000 an ounce range, which will be about $100 on the gold spider ETF here, and I do see that happening. And so that's only a decrease by about another 15% or so, and then I might actually start being a buyer at the $100 level. So we'll see how that goes, but I see this in a bearish downtrend as well, and a lot of pressure being placed on the downside. So number 2 will be gold and silver will continue to be bearish, and be the official announcement was gold will be less than $12.50 an ounce and silver less than $18 an ounce. The next one was regarding the dollar DX. I see the dollar continuing to strengthen over the course of the next year with what we're seeing in the emerging markets, Eurozone, Japan, with the Eurozone getting into massive problems regarding the EU, and Japan getting into massive problems regarding their economy. Recessions in the emerging markets are happening, and the dollar is seen as safe right now. There is nothing that I'm seeing that is going to change that right now. Now, it's really hard to predict 6, 9, 12 months from now, but that's kind of what this is. So this is a 2015 prediction, and so when I'm looking at what I'm seeing right now, I do see the dollar increasing in value, and ultimately I see the dollar actually getting into about 100 on the dollar index, and I also perhaps, and I'll talk about this in a different prediction, but see a lot of problems with the European Union out there. So that is prediction number 3. The US dollar dollar will continue to strengthen as it has had a historic run in 2014. Now, the next prediction we had was one regarding, let me get it, make sure I'm on zone. Okay, the Eurozone will bail out Greece again after Greece threatens to leave the EU. This will frustrate Germany even more, whom then threatens to leave the EU due to the bailout of Greece, quantitative easing, and the entire European Union response to the Ukrainian issue. This puts tremendous pressure on the euro. And this is where the prediction really is about. It's about the euro. It's not exactly about Greece and Germany and the eurozone. It's specifically about that currency. With the European Union and specifically Mario Draghi and the ECB getting into the bailout of Greece again, as well as starting the quantitative easing bill, most likely in January or February. If Germany has anything to do with it, they might change that. But when you're looking at that entire situation, it's really hard to see the euro strengthening against the dollar right now. When you have the possibility of member nations leaving the euro, even as something as small as Greece, who is a very, very small partner of the euro, it's symbolic to the European Union. And where does that lead? Does that lead into Spain? Does that lead into Italy? Does that lead into Germany? Where does that lead into if that ever happened? I'm not saying it's going to happen. I'm just saying the potential, the thought process, the possibility of it happening is going to put a lot of pressure on the euro. In fact, I see a lot of opportunity in short euro, long dollar over the course of 2015. There'll be times to get in and get out of that, obviously, as it will be very news driven. But I do see the euro following based on the problems increasing in the eurozone, and specifically with Germany, the bailout of Greece being a catalyst for stronger disagreements in policy statements between Germany and Draghi, and specifically France and Italy out there. So number 4, the Eurozone will bail out Greece. Greece will threaten to leave. This frustrates everybody. Germany gets pissed, and then all of a sudden everybody bails out, and this leads me to shorting the euro. Number 5, and this goes to the market itself. Let's go ahead and look at the market very quickly. Let's pull up TOS again, and let's type in /ES. Now, the S&P 500, ultimately 2014 will looked upon as it had a fairly decent year last year. The market went up a little bit, we'll say a little bit more than 10%. Last year, maybe right around 11 to 12%. I haven't done the math on it yet. Ultimately, though, it was a lot of pressure. I mean, if you'll remember back in early October, it got down to break even, and so really kind of the last quarter led the S&P 500 to make those gains. The question is, does the market continue to move up? If you ask the institutional banks out there, everyone will project above 2,200. 2150, 2200, 2250, they all project between 7 and 10% next year, because that's what they always do. That doesn't mean that's always happens. Does it continue to move up? Does it continue to move up in a rising interest rate environment? Does it continue to move up as the Eurozone becomes problematic? Does it continue to move up as recessions and global tensions rise regarding the U.S. and its role in the global marketplaces? Does it continue to go up in a long-term market cycle where we're now approaching 6 years into this bull run from 2009 now into 2015? In fact, in April of this year, it will be a 6-year run. If you look at the technical charts, that's longer than the dot-com run that lasted right north of 5.5 years. Does it continue to run in everything that the Fed is doing without quantitative easing? Nobody knows. Anybody's guess is as good as mine, but I gotta put something down on paper. I can't sit on the fence, and I am calling for the S&P 500 to be lower than its current market value at 2050 by the end of the 2015. Now, I don't see it tanking necessarily, although that is a possibility. I simply see it being slightly lower at this point as we continue the Titanic turnaround before the Titanic crashes. Hope you enjoyed the predictions, the market forecast by Matt Justice for TackleTrading.com. You can check us out at the website and get all those free goodies over there at the website. You can also check out Gino Port's Gambling Report every week. That is absolutely killing it, and my Forex Report, which has been an absolute hit last year as well. So we'll see you at the website and see you next time.